Hello everyone, welcome back to Double Click Academy, your online computer lectures. Today we shall be handling that is how to treat accumulated depreciation in Quickbooks, and we have our guiding trial balance here. So now you realize basically we have our fixed assets here with their related accumulated depreciations. This is our trial balance, of course, whereby we have the details, the debit and the credit. So here the fixed assets basically we have is land and building at cost. Then we have furniture and fittings at cost, and then their related accumulated depreciation of land and building, then accumulated depreciation of furniture and fittings. So basically, we want to understand how are we going to treat this in our QuickBook dashboard. That's basically what we shall be doing. And to start up with, we can of course open up our company. Now, assuming the company is already here open and the company is Monarch company. So basically, that is that. So we can now go straight away to treat this accumulated depreciation with their related fixed assets. So of course we know basically how we always create the fixed asset or the any other account. We basically go to our accountant or list, and then from there that is where we shall go to chart of accounts. We are basically interested in creating those individual fixed assets. So we shall now come to this. Then of course we know that we shall come to account, then new. From new, we are starting with our fixed asset, which is land and building. So we shall now create that, and we know that is a fixed asset. We shall select fixed asset from there. Then after selecting fixed asset, we continue now to rename that fixed asset. Now the fixed asset we are creating is basically land. In our question is basically land and building. So we shall now create here land and building. Land and building account. That is the account we are creating. And of course, from there, we also have its related balance, but we can either enter balance from here or we can go to make general journal entries. But we can decide to enter the balance from here. After all, it's a opening balance. So the amount we are entering is 8.2 into our land and building. So we shall of course come here under enter opening balance. From here we shall click on enter opening balance, and then we shall enter the balance, which is we are saying 8,200,000. So that is the closing balance. We make sure that is really 8 million. Then we can now enter the closing date here, the opening balance date, assuming it was from the previous month, maybe of March 2021. So that is the amount we are entering there, and then we shall click OK. Now you realize we have entered the amount here, and then since we already have another fixed asset, we can save a new, so that we can also still enter the amount or the balance of the next fixed asset, which is furniture and fittings. So this is the next amount, furniture and fittings. That is the amount we shall, the account type we shall be entering there. So it's furniture and fittings. Furniture and fittings. And it also has its own balance, which is at a cost of 3.3, 3,300,000. That is the same thing we shall enter there, 3,300,000. And of course, the same date, since all of them are closing balances. So from there, we shall click OK still, and then since it's the last one, we can save and close. So here now you realize we have basically entered the two fixed assets, that is furniture and fittings, and then land and building. Their relative amounts are here. Now our next task is basically to create their respective accumulated depreciation accounts. So what we are going to do, of course, we shall get back home for you who is just a new person who is watching our tutorials. But in previous tutorials, you already know how to create the accounts. So we shall now do the same thing, because our interest is basically on the accumulated depreciations. When you look at them, realize basically our fixed assets had debit balances. From here, we had the land and fittings having a debit balance, and then this one also having a debit balance. When you come to this accumulated depreciations basically have a credit balances. So now that is now where most people always get confused from, and others even tend to treat it otherwise. But when you look at your financial accounting one, or whichever financial accounting that you've always learned how to post the things in their respective ledgers and then into the trial balance, and at the end of it you also treat them into your balance sheet, you realize accumulated depreciation always appears in the balance sheet, and it appears in the balance sheet area. Basically, it reduces on the fixed asset directly from the balance sheet, and they also under fixed assets. So if the fixed asset you're working on is land and building is a fixed asset in the balance sheet, and it always be affected negatively, or it always being reduced by accumulated depreciation. So when you look at accumulated depreciation, we also treat it as a fixed asset. Most of you always want to treat accumulated depreciation as the expenses. Others even call it whichever kind of names. This is the difference between accumulated depreciation and depreciation. For depreciation, remember it's an expense, but accumulated depreciation always appears in in the balance sheet. So that makes it to be also a fixed asset. So now we are going to create them as their own individual accounts, but they will be accounts that will be called fixed assets, but they will also be sub accounts of the main fixed asset. So that's basically what we are going to do. So of course we know that we shall go to our accountant, chart of accounts. Then from here we are creating new account. Now from here we create new, and we are saying that even accumulated depreciation, we are treating them as fixed assets. So we shall click on the fixed asset there. Then now we shall come and give it its name. The name we are giving it, of course, we are starting with land and buildings. So the name we are giving this will be accumulated depreciation. Accumulated depreciation. You realize in most cases the words tend to be more than, maybe we can put it in, okay, we can first experiment accumulated depreciation of land. So you realize it ends there. So we can just abbreviate this so that we can have all our words entered into our name. Accumulated depreciation of land and buildings. So you realize it has now fitted. But what you have to know is that this account name we are giving here, accumulated depreciation of land and buildings, it is a sub account of. Now we come and select what is it a sub account of. Remember, what this means is that accumulated depreciation of land and buildings is a sub account of what? Of land and building. So this is, click on this. So it means we have made accumulated depreciation to be a sub account, because remember in a balance sheet we're saying that it's the same thing. When you look at your balance sheet, you realize there is land and building, then beneath it or below it there is accumulated depreciation, which in our manual accounting system we put into a bracket, and the amount into a bracket, implying the amount deducts the main amount of land and building. So this is the same thing here. We are calling it a sub account. We shall also see how we are going to deduct that from our main account. So that is that. So from here, when you look at this, we can just straight away go to save and close. Now, if you save and close, it means, okay, we can save and new for this case, so that we can also create accumulated depreciation of furniture and fittings as well. Furniture and fittings. So you realize that is that now. Then of course we are also calling this is a sub account of furniture and fittings, which is here. And then we can save and new. Now when you look at that, that is not all. Okay, we should have saved and closed since it's the last one. So we realize we have already entered them here. But what we are going to do, we are planning to treat them as subtractions. They should deduct on the main accounts. So remember what we always do, we go to our chart of accounts or wherever, then we are interested in making a general journal entries. In this making general journal entries, we are coming to make general journal entries here. And of course, we know what we are talking about here. So here, we are making a general journal entry. Here is our general journal entry. And from here, of course, we set our date, which is 31st, and then we are now our first account. We are first of all posting. We are starting with our first fixed asset, which is land and building. But we are posting basically what we are posting is accumulated depreciation. We're interested in accumulated depreciation of land and buildings, which is this. And we know that a normal fixed asset always has a debit balance. But that one, when you're deducting the fixed asset, it doesn't go into a debit side, but otherwise it has to go to a credit because we are deducting. We are interested in reducing that fixed asset amount. So we are coming to this. If it was a normal, which always increases on it, we would go to a debit. But for this case, we're interested in reducing that fixed asset. So that's why we are coming to this. And you realize that our accumulated depreciation for land is 700. So here we debit 700,000 here. That is 700,000. And of course, you know that when you are dealing with closing balances, we complete the transaction with opening balance equity. So from here, we shall look for our opening balance equity, which is that. And you realize we have balanced it off, and then we can save a new because we still have another transaction to fit in. That is now for accumulated depreciation for furniture and fittings. So which is that also still carries the same side, which will be, we shall credit 200,000 under that. So it will be 200,000 there. And then we shall complete the double entry with opening balance equity. So that is that the date is the same, and then we shall just save and close since it's the last one, and then we can now go and look at it from our chart of accounts. Now, when you come to chart of accounts, you realize furniture and fittings is here, and on our trial balance in the equation, furniture and fittings at cost had 3,300,000. When you come to this, it has reduced by 200,000 because when you come to accumulated depreciation, it has put a subtraction here. So it means in total now, our fixed asset of furniture and fittings has lowered down into 3.1 after we reduced on the accumulated depreciation. It is the same thing with land and buildings. It has also reduced from 8 million 8,200,000 to 7,500,000 after we deducted the 700, which is accumulated depreciation. So that is basically how we treat this accumulated depreciation. Even when you look at it, the movement, you realize a fixed asset which is furniture and fittings is here, and it's at the extreme. Then accumulated depreciation is a little bit entered inside. That shows you that it is a sub account of this. It's the same thing to this, and that's why we have our deductions in that form. So now we are good to go, and that is basically how we treat the accumulated depreciations. And please continue watching this video over and over again until you really smoothen your skills into this treatment of accumulated depreciation.